Hi, good afternoon. Welcome to the marketplace. Coming up, the International Monetary Fund set to begin its fifth review of Ghana's performance under the ongoing fund-supported program. Also coming up, the World Bank is urging a comprehensive review of the Bank of Ghana's foreign exchange intervention program. And fuel prices at the pumps are on the rise again as more oil marketing companies follow Goel's lead in adjusting prices upwards. My name is Darryl Kwao. Thanks for being with us. Details coming up. And thanks for staying with us, everyone. Fuel prices at the pumps are on the rise again as more oil marketing companies follow Goel's lead in adjusting prices upward. This comes more than a week after Goel, one of the major players in the industry, increased the prices of all petroleum products by over 3%. Here's more.
Shell, for instance, went up over the weekend. However, not all products were increased at the pumps. Checks by Joy Business showed that diesel went up and a litre is going for 14 Ghana cedis, 18 pesos. However, that of petrol, which was selling at 13 Ghana cedis, 59 pesos, September 2, 2025, has been reduced to 13 Ghana cedis, 44 pesos. Another major oil marketing company will be increasing their prices later this morning. However, it appears that most of these oil marketing companies may not increase their prices, but wait for October 2, 2025, that is next month. Some of them have told Joy Business that competition has forced most of them to keep prices unchanged during the second pricing window for this month.
Now, the World Bank is urging a comprehensive review of the Bank of Ghana's foreign exchange intervention program. This follows the bank's latest report revealing that nearly $4 billion was spent between November last year and May 2025 to stabilize the cedi. The World Bank becomes the second major institution after the IMF to raise concerns about the sustainability of and impact of the central bank's intervention.
It says the action by the regulator resulted in almost 60% appreciation of the Ghana cedi during that period. But the World Bank noted that even though this might be celebrated, there are concerns about the sustainability of this move. The World Bank was worried about the impact of this on Ghana's international reserves if the pressure on the cedi is sustained. In the medium term, the World Bank says an appreciation of the exchange rate could harm exports and boost imports, showing an accumulation of the foreign exchange reserves. But in the long-term effects, the bank says could include price distortions and could weaken local production, as well as tradable goods, reduce the country's competitiveness, and hinder ongoing structural reforms aimed at transforming the Ghanaian economy.
Well, meanwhile, the Bank of Ghana is pushing back against the World Bank's reported figures and assessment of its market support program. The central bank is contesting both the nearly $4 billion figure and aspects of the World Bank's interpretation of its intervention strategy. Moving on, the International Monetary Fund is set to begin its fifth review of Ghana's performance under the ongoing fund-supported program. This follows the arrival of the full IMF mission team led by Mission Chief Stefan Hode, who touched down over the weekend.
Fresh information that Joy Business has picked up shows that issues about arrears clearance that government is yet to finalize in terms of its audit, especially how much you spend in the area of construction and projects for last year will come up strongly during this meeting. There are also concerns about whether Bank of Ghana has done enough when it comes to its policy rate cut, looking at the significant reduction in the inflation rate since the beginning of this year, as well as its reserve program and its dollar intervention. The review will primarily focus on the economic data of Ghana ending June 2025. Meanwhile, there are strong indications that Ghana will pass its fifth review, resulting in some $360 million being disbursed in October next month to hit Bank of Ghana's account. So far, Ghana has received some $2.3 billion since it signed up to the IMF program. This will be the last but one review before Ghana ends the IMF program in May next year.
Well, joining me on Zoom is Associate Professor of Finance at the Andrews University in the U.S., Williams Whipper. Good afternoon to you. Thank you so much for joining us here on the marketplace. So let's talk about what is supposed to dominate discussions as the IMF reviews the program. I want to first ask you about the significance of the unresolved arrears clearance to Ghana's ability to pass the IMF review, as well as the risk they pose for the broader program.
Good afternoon to you, Daryl, and good afternoon to our viewers. So the main thing why IMF is focusing on this arrears prevention is specifically towards fiscal repairs. They really want to make sure that the government has a plan and to be able to pay off all the liabilities, especially the hidden supply liabilities, and then also independent power producers, with their aim that when the program ends, we are not going to carry over these risks into the post-IMF program period. So the physical repair is very, very, very important. Its impact, if it's not done well, it's going to worsen the non-performing loan issue we have in Ghana, and the banking sector will be affected. Already we know the non-performing loans are in the 20% thereabout, which is very threatening to the survival of or the banking sector stability. In short, they are really focusing on how can we ensure that there is financial assurance just after Ghana exiting the IMF program, and that is the main aim. If this is not handled carefully, it's going to we may go back immediately to IMF. Remember, about 2 years ago, I made a speech in Ghana, and I said that we probably needed more than the 3 years, looking at our indiscipline. So this is very, very, very significant review. One other thing, there have been a lot of, from the audit point of view, I'm sure government is also making sure that all claims that are coming from suppliers are due claims that they must pay, and they are paying the right amount. We know just before the election, a lot of contracts were given, and they may have to ascertain that. So probably once they meet the IMF, they must explain to them that the reason why they have not been able to do this is because of the audits. However, government must prove to IMF that they have made some cash available. Just after the audit, they will be in the position to be able to pay them, which will bring back the financial assurance I talked about, that, and is going to reduce the non-performing loan risks that we have in Ghana.
Yeah, some of the central bank's moves are going to go under scrutiny. Inflation is going down. The central bank has cut the policy rate. Do you think it's sufficient, or being just too cautious as we look towards macroeconomic stability?
So I look at the data and I see that probably in my perspective, it is more appropriate rate than being cautious. So if you've noticed, within the last two meetings, they have cut the monetary policy rate by 650 basis points. Inflation has moved as at August to about 11.5%, which is within the 4 years, the lowest. We are almost close to our inflationary target of 8 plus or minus 2%. So this strategy of the 650 basis point, in my perspective, is good. And government must ensure that. I'm sure in the next their last review meeting, probably they may have some slight cuts, because we are hoping that inflation may drop a little bit in September and also October, which will put us within our target of 8 plus or minus 2%. What we may have to watch in all these rate cuts is that how is the rate cut propelling growth, especially solving unemployment problem, which is a major challenge. We are anticipating that industry, as the rate drops, companies will now start to expand their operations and employ more to create employment. Employment from both formal employment and informal employment, and we may see that the rate should have an impact. If this is not done, then I mean, whatever we have done is, I mean, just to solve one leg. The cut in monetary policy rates must also ensure growth. That growth must be seen in unemployment rate decline, which is very, very important. This government, their agenda is also ensure that the unemployment rate drops. If they are unable to do this, then it becomes something else.
Yeah, and we are keenly watching to see what impact these policy rate cuts would have, because I mean, we reported last week some local industries saying that they're in a tight place because consumer spending has dropped. Let's talk about the central bank's interventions in the Forex market, because that has become topical. We ran a story earlier, the World Bank raising questions about it. I'm sure it's going to come up in the meeting with the IMF as well. What do you have to say about the central bank's approach to dealing with the Forex market and its interventions?
So, I mean, as a country, IMF is aware that we do a dirty float, which means that the central bank will intervene in the market. Two main things in my perspective. I'm sure the central bank, they have checked their current accounts position, which is positive, and then also foreign direct investment inflows also coming in. And once you have these inflows being established, you may be in a position to intervene. What I may think that is lacking is that I think we may have to have a clear intervention rules or LI established by Parliament that will regulate how the central bank will come into the market to intervene. At the moment, we don't have, no one knows how and when they have to come in. So if they're able to establish an LI or some rules, and we all players in the industry know that, okay, these are the parameters and this is backed by law, then we are clear that anytime the Bank of Ghana is coming in with an intervention, it's what we expect, and not that they'll just pump, I mean, a lot of money into the system. When I talk about the clear intervention rules, it may also go about, they may also have to look at the supply side, and the demand side, especially what is really causing the demand, if they can be able to address it. But at the moment, there are no rules. They just received orders from banks, and then they may have to intervene, which is something that is lacking. So let's see how this goes. For it to be sustainable, in my perspective, they must have to watch the exports, and then also the foreign direct investment, if it works well. I mean, we know one leg of the export is their gold, the government gold, call it gold board strategy. We may have to look at it very well. It's what is bringing in the Forex now.
Right.
We may look at that traditional export as well.
Yeah. What structural reforms or shock absorbers should we put in place, if you like? And I'm saying that because I know you also heard about the World Bank's feedback on the Russia-Ukraine war and COVID-19 and its impacts on the economy. What reforms have to be in place to ensure that there's fiscal and macroeconomic stability once the program ends in 2016?
Yeah, so post-COVID, post 2016 structure, these I'm just going to go straight to my points. The first is how we focus on our physicals and then specifically on our procurement rules. That is the first thing. Then the second one is our revenue lines. How are we closing in all the gaps in terms of VAT compliance, property rate, which we have talked about, and then exercise duties. Then under the revenue line, we need to be able to simplify the exemptions rules. You know, in the previous government, it was a major talk, which we have to be able to address it. Also, the arrears that we owe, and probably we may have come after the audit, come out with clear guidelines so that we will not go there again. Energy sector and state-owned enterprises. If you ask me, they hold about 40% of the problem of Ghana, especially the state-owned enterprises. There should be a way to check how they improve on their performance, specifically on what contracts they must enter into, which becomes a liability onto the books of Ghana. And then the next one will be, which we just discussed, the Forex market and its intervention.
Right.
Because we know Ghana, anytime there is any depreciation in our currency, it will have an impact. The last part is how do we position ourselves for after, ensuring diversification in our exports. If all countries decide, especially in Europe and in Americas, as is happening, decide to come out with tariffs, how are we going to ensure that we continue with our exports? So after gives us that opportunity, trading within Africa is something that we must be able to focus on. Let me talk about this, which is human capital. There are a lot of people graduating from the university. What strategy are we putting in place to turn them into not employees, but employers, which is entrepreneurs? It is very, very key. If you're able to do these things and focus on them, you'll be able to survive after post-COVID.
Okay.
And we must keep an eye also on agriculture because that is what we if you ask me, that's what we do. We know best to do to create more employment. The Agri Ministry must ensure that they also create a platform for that employment.
We've got to go. Thank you so much,
Thank
Professor
you.
Williams. We appreciate the insights there. Thank you so much for your time. You're watching The Market, please. Taking a short break. When we come back, we have your financial markets update. Thanks for staying with us on The Market, please. The government missed its Treasury bills target just a week after recording an oversubscription as some investors continue to prepare fixed deposits and the Bank of Ghana bills. According to auction results by the central bank, the government recorded a 37% undersubscription of the short-term instruments. Head of Trading at Republic Securities, Patrick Edemagama, joins me on Zoom. Good to see you, Patrick. How did the auction go?
Well, Daryl, on the money market last week, we noticed that the government accepted 3.46 billion against total bids of 3.48 billion and missing the target, which was 5.5 billion Ghana cedis. Again, we've seen that the government was able to withstand the pressure from accepting bids that were too high. So it rejected some bids on the market for the 91-day and the 182-day. We noticed that the 91-day increased by 5 basis points to close at 10.5%. The 182-day shot up to close at 12.39%. And then the 364-day bill also increased by a basis point to close at 12.89%.
Yeah, investors seem to prefer fixed deposits and Bank of Ghana bills over Treasury bills, correct?
Yes. We are seeing that there is a lot of investors that are not happy with the rates, and it is clear also from the government that the rates will remain in this range for some time to come. We are expecting the new bonds to hit the market, which we think might bring some shake-up in the market and also maybe end up affecting the equities market. But for now, investors will only accept rates that are on the high side, and we are seeing this happen every week.
Well, let's turn to the stock market for a quick update. Share prices of MTN Ghana, Societe Generale, and Car Bank are tipped to increase. What else should we expect this week?
Well, in a rally that we are seeing now on the market, so last week we saw about 13 stocks increasing, just seeing about 2 laggards. We expect the trend to continue. For now, the market has gained 66.1%, which is like the second highest since 2013. And we expect the market to continue that trend. The demand we are seeing in stocks like Farm Milk, MTN, GCB are really, really, really high, and this should affect pricing of these stocks positively.
All right, thank you so much. They say purple is a sign of wealth. Good to see you in a purple suit.
Yeah.
Adam, thank you.
Thank you.
All right, and that's our program. Thanks for watching. There is more news on our website, myjoyonline.com/business. There you go. IMF begins 5th program review of Ghana today. Also, T-bills auction, government records 37% under subscription, interest rates rise. myjoyonline.com/business. My name is Darrell Kwao. Thanks for watching. We leave you with our Money Lab episode for today.
Hi, welcome to Money Lab. My name is Paul Mant, Managing Director of EDC Investment Limited, a member of the EcoBank Group. We started having discussions around financial freedom. And today I want to deal with the traditional thinking, the new way you need to think. What is the traditional thinking? The traditional thinking is go to school, find a good job with some secure benefit. You work till you are 60 and you get a good pension. This thinking belongs to the old school. It doesn't work in the year 2025 and beyond. What is the new way of thinking? The new way of thinking is you need to learn to save. Beyond savings, you need to invest. Savings is deferred consumption, but investment is you make the money work for you to generate returns. And the reason why you are doing this, you want to gain financial freedom. What is financial freedom or financial independence? It is getting to that stage in life where with or without salary, you can live the life you want to live. Many thanks for making time for Money Lab. Remember, financial independence is possible.